2019 paper, the club accounts, and just quickly run through the basic layout of the documents to be doing. So the opening accumulated fund, the income and expenditure, there may be a bar trading account to be done, so I have that left down the end. So let's get started in. So first of all, with the accumulated fund, we start with the figures that we have at the top of the question. So we've got Clubhouse. Clubhouse is bar stock is 5.8. Equipment is 26. Investment interest due is 400. So that means if there's investment interest due, there must be investment. So that's a number we'll probably end up having to calculate. Bar debtors is 480. Life membership 45, so that's a liability of the club, so that's a service owed back to the members. Bar creditor is 750. Wages due 1640, again another liability. Levy reserve. So that's 30. And subs prepaid, so that's subs paid in advance, so we owe that service back to our members. So that's a liability. So that starts it. Next thing what we do is we read through the rest of the question and see is there anything from the question that might be relevant to the beginning of the year. All fixed assets of 2 years accumulated depreciation. So I'm going to need to include those, and I'll put those in as liabilities. So accumulated depreciation. So all fixed assets. So we've got Clubhouse and we've got equipment. Somewhere when we read down through the question, probably down the bottom of the question, it will give us the numbers for that. We'll put those numbers in as well. Then we have the bank. So the receipts and payments, that's like basically a bank account. So we have a balance on the credit side. So that's actually a liability. So 7,300. Now the interest on investments, I'm just quickly checking, is there interest on the investments down the end? Investment interest, so there's interest due at the end. So I need to work out the real figure for investment income. So I'm trying to work out the figure for the year so that I can work out what the actual investment is, because I know the percentage interest that we should have received. So it's 4% is the interest. So we had so we received 2,800. There was an amount due at the beginning, I think it is. Investment interest due is 400. So that's not included in that 2.8 is 400 from last year. So that's taken out. Down the bottom of the question, then it says that there was investment income due at the end of 300, so that's added on. So the real figure for investment income is all those added together. So that represents 4%. So therefore the 100% is the loan. So the 2,700, we'll divide that by divide it by 4 to get 1, and multiply by 100. Or so divide by 4, that gives me 1%, and multiply by 100 to get the original figure for the loan. So 67,500, so I'll put that in there. Now, so this here is the income. So this is the figure that we should have received this year. Okay, back up to this. We have a loan, so this is quite standard. These do appear in most of these questions. So we have a loan, and then we have loan interest due. So again, just do a note for this. So I need to work out what is the loan interest for this year. So we'll work this out from the percentage we're given. So we've got 18 months loan interest at 3% per annum. Okay, so if I turn this into a percentage, this number, so I've got loan, so I've got 2,900. Okay, and that equals what in the percentage? Well, 18 months is 1.5 years, so it'll be 1.5 is 1.5%. So half. Sorry, yeah. So 12 months would be 3%. So 6 months is another half added on, so it's 1.5. So that means a total of 4%, 4.5%. Sorry. So 4.5% added on to the 100%, which is the original loan. So that means that's 104.5% is a loan. So to find out the original figure for the loan, to get the original, so I was going to say 100%. So that would be that number divided by 104.5, and then we multiply the answer by 100. So the original loan was 20 grand, so put that in. Now, the loan interest due. So 5 out of 18 months was due at the beginning, because 5 was paid during this year. So that would be the loan times 0.03, that's the interest per annum, times 5 taken away from 18 leaves 13 over 12, 13 months interest. So the expense then down here, we have loan interest, which is 20 grand times 0.03, so that's 3%, and we paid it on the 5 months into the year, so it'll be 5/12 of a year. So that's that. Then we continue reading down through the question, seeing is there anything else that might be relevant for the beginning of the year. So there's closing bar stock, etc. Now usually you'll find in subs or something here. So 5 new life memberships, including some from last year. Just quickly checking, the year we're dealing with here is 2018. So anything from 2017 is going to be for the beginning of the year. Now, so that means I'll have a life membership due at the beginning. Now that is, so we have to work out what the number is. So it's 5 new, so it's 15 from 2017. So if life membership is 45,000, so 45,000 divided by 15 means that life membership is 3,000 each. So life membership due is going to be 3,000 multiplied by 5 new ones. So it's 15,000. Now just quickly reading through the rest of it. So life membership credit income period. Okay, so we're going to be writing off our life membership. So I'm just going to put that in as I go through it. So we'll come and calculate that after. Grant from the lottery received on a once-off basis to support the day-to-day activities of the club. Now, because that grant was not a regular grant that's going to come in, that's going to be listed in finance by. Though it says here it's going to be treated as a revenue item in this case. Usually we would expect this to be in finance by, but it's going to be included as a revenue item, so grant. So that's going to be included as an income. Equipment depreciated, so we will have depreciation equipment. And there's wages due out. Okay, so there's going to be wages, going to be another expenditure. And we'll need to take into account prepaids and dues. So we have all the information that we need to be able to finish off our opening statement of accumulated fund. So we can add up all of these. The depreciation on the clubhouse, we'll deal with those later on. But that's the basics of how we start off the accumulated fund for the club.